Hey, welcome back to my channel. My name is Amal and I am a financial planner and fashion enthusiast. I recently have been getting lots of questions on what's going on with the market. How come GameStop and AMC are making headline news? What's going on with hedge funds, Robinhood? So I figured I'd come on here and make a quick little video explaining what actually happened. Let's start with hedge funds. What are they? So hedge funds are actually considered alternative investments. And what that means is that there are special requirements to even be able to purchase a hedge fund. Most individual investors are purchasing mutual funds, index funds, ETFs, individual stocks, probably, maybe some real estate. But it is for those more sophisticated investors that are purchasing hedge funds. So the hedge fund company has one goal in mind. Well, maybe two. Maximizing profit and minimizing losses, and they'll figure out how to do that by short selling, leveraging their money, and using other non-typical investment styles in order to do that. And what they did most recently is they tried to short AMC and GameStop shares. What does that actually mean? What does it mean to short a stock? So let's say I'm the hedge fund company and I go to my friend and I go, hey, knock, knock, knock. Could I borrow a share of GameStop? So she says, okay, that's fine. So she lets me borrow a share of GameStop and I still owe her this one share. Now I go into the marketplace, sell that share. Let's say it's $20. I made $20, but I still owe her share of GameStop. I wait for the market. What I'm hoping for as the hedge fund company is the price to decrease. And once it decreases, I could re-enter the market, purchase it at discounts, and keep the profit for myself. So let's say the price of GameStop has now gone down to $15 a share, and I decide to go back into the market and purchase these shares and pay her back for the one share that she let me borrow. Now, I sold it initially for $20. I repurchased it for $15. That means I have now profited $5 off of every share of GameStop, and she has kept her share of GameStop. That's essentially what had happened. So usually that works, right? But what happened was the individual investors caught on and saw that these shares were being sold at a discount. So they went in and started purchasing big amounts of AMC, big amounts of GameStop, causing the hedge fund companies to not be able to afford the change in the prices. Now, I'm going to take a step back and explain the relationship between the pricing of stocks, and the demand. So pricing is set by two things, the demand and the supply. So if the demand of these stocks go up and there's less of a surplus, the price goes up. So the hedge fund company who was thinking they were going to purchase these stocks at a discount now had to pay back all of the stocks the shares that they borrowed at a more expensive cost, which caused some of them to go bankrupt. Okay. Now, how is Robinhood related to this? So Robinhood, along with some other trading platforms, started to restrict individual investors from purchasing these stocks. They claim it is because of their clearinghouse not being able to fulfill these orders. Now, if you don't really know how clearinghouses work, I could spend a whole video on it, but basically, when I, as an individual investor, purchase a stock, for example, it doesn't get cleared right away, right? I may see the reflection of that stock being in my accounts, but it has to settle. And so during that settling phase, the clearinghouse fronts the money and gives you the stock, right? Everything happens behind the scene. You get your stock. But Robinhood claims that during this time that the clearinghouse just wasn't able to fulfill all these orders, and then they had to put a stop to individual investors purchasing it. But the interesting thing is, and I am not going to speak on whether that was right or wrong, but the interesting thing is that last year in 2020, Robinhood decided to bring their clearinghouse in-house. So they were no longer outsourcing that part of their business. And last year alone, they made over $20 million in just from revenues from their clearinghouse. So it's questionable what recently happened and how they stopped, especially because, Robinhood does have a relationship with some of the hedge funds that were kind of in the mix of this whole situation. Now, the SEC, which is a federal organization, and what they do is basically make sure that everything in the market stays ethical, that there's no insider trading. So the SEC is actually looking into if, Robinhood was guilty of manipulation of these, the sales of these shares, or, were they coerced, were they not, who knows, but the trends show that Robinhood may not have been innocent because other firms like Charles Schwab and Fidelity were able to fulfill their shares while Robinhood was not. So, long story short, how does that affect individual investors? Well, as an individual investor, you are allowed to purchase shares when the shares go down. So how does that impact you? Well, if you look at market trends, this might be a buying opportunity. But what I always tell my clients is when you take on a sexy or a company that's now making headlines that never was, you're not taking on a risk because there hasn't been the stability of the company for a while. So I hope that made sense. And if you have any future questions on whether, it's on short selling, hedge funds, mutual funds, feel free to comment down below, ask me a question, and I will make sure that I post more videos moving forward about finance. See ya.